Guys, we had a red day today. The S&P and the Dow went down 0.3%. We had the Russell down 0.6% as the NASDAQ 100 went down 0.7%. So I want to break down some stocks, some charts, my thoughts on the markets. Are we going lower? Is this just simply a healthy pullback? We're going to break down all of that. So if you all find value, hit the like button, subscribe, check out my Patreon down below if you want my buy, sells, call outs, morning update videos, and don't forget to get your $50 free from M1 Finance, which is limited time, by the way. That's also linked down below. Check it out. And without further ado, let's get right into the video. So like I said, we finally had a little bit of red, and you guys are probably, well, a very small amount of you, hopefully, are freaking out right now because the majority of you know that when the markets see a bit of a haircut, which in this case we barely went down, it's pretty healthy, right? If you notice here on SPY, nothing has really changed in terms of the trend. Sure, we went down a little bit. If anything, we just got closer to the main moving average on this 20-day chart, and this very well could be a dip buy, and that is right by the 180 SMA. As you guys can see here, we pulled back in the beginning of the day, and I'll show you this on the intraday. We pulled back right at open pretty much the first 30 minutes, and then the rest of the day really was just consolidation, and it was right above that main moving average on the 20-day chart, like I just said a second ago. So as of now, this is simply a healthy pullback. But if we break under this main 464 level, 180 SMA 20-day chart, if that happens, guys, then I'm going to be a bit more, okay, I'm going to be saying, hey, there could be a little bit more downside, but we're just not there quite yet. And it's the same thing pretty much on QQQ, which you guys know tracks the NASDAQ 100. A lot of the sell-off came in the beginning of the day. We saw that big drop from 399.50 to about 394.75, and then pretty much the rest of the day, guys, we just consolidated above that main 20-day 180 moving average. So this is nothing crazy. It's a simple pullback. You guys can see it on the 4-hour chart as well here on QQQ and on SPY. Both of these guys, they're holding the main moving averages pretty much on all time frames. So let me know your thoughts. We had a pretty rough day. I'm not going to lie. Some stocks got hammered. I mean, Tesla today went down 12%, which let me just show you the Tesla chart. We did call this out, by the way, and I actually trimmed some of my Tesla at 12.30 or 12.20, one of those two prices, and we did end up calling that out on Patreon. You know, I post all my stuff there. I post all my moves, and you guys got that alert where I trimmed a little bit of Tesla. And now look, it looks like we could go to 900 on the lower end, right by the main moving average on this 4-hour chart, or maybe even 950, 1,000. You know, I don't see it going much lower than that, at least in the very short term. So what do you guys think? Let me know your thoughts in the comments. Hit the like button if you haven't done so already. It really helps me out in the overall YouTube algorithm, and it tells me that you guys actually like my videos, which I'm sure you guys do. I mean, but hey, hit the like button, help me out a little bit. I appreciate all of you. And now let's talk about some stocks. We had a couple earnings reports today. We had NIO, Upstart, Coinbase, DoorDash, Win, Fubo. Pretty much all of these that we're going to talk about today reported earnings. So let's take a look at what we're seeing here. NIO. They are moving down a bit. They closed at $40.60 today. It went down about 6%. It went down about $2.50, and now in the after hours, we're down another, it seems like, $1 from where we ended up closing. But to be honest, this trend is still intact. The pattern, that is, that I'm seeing here on the 4-hour, which if I zoom in a bit, you can see it's an inverse head and shoulders. We have the left shoulder, the head, the right shoulder, and with this pullback, we simply pull to the 180 SMA on the 4-hour chart, and it seems like buyers are already stepping in there. And that's also right by the neckline, which is critical for this to hold the neckline of the head and shoulders pattern, inverse head and shoulders, for this to end up ripping back over 40 and eventually to the mid 40s, which is where I see it going in the short term. That is where my short target is. So watch out for NIO, and I just realized we didn't even look at their earnings. So let's see what they did. They did 6 cents in the red EPS, which is up from the 12 cents in the red last year. Year over year, that's a pretty good increase there. And sales came in for the quarter, Q3 that is, of $1.52 billion. So pretty solid sales. And to give you guys some perspective on how quick this company is growing, last year they did $666 million in revenue in the same quarter last year. So they pretty much 1.5x that. Actually, wait. They doubled it. I meant 2.5. So it's almost 2-3 times more than what they did, the revenue this quarter, than what they did last year. And let's see here. Do we have any guidance? They see Q4 sales of, okay, maybe that's why the stock's selling off a bit. Q4 sales came in a little bit under the estimate. Well, a lot, actually. The estimate is around 1.45 to 1.56 billion versus the 1.74 billion estimated, and they see deliveries around 23.5 to 25.5 thousand. That's what I'm seeing here, which if that if that occurs, that would represent an increase of approximately 35% to 46% from same quarter of 2020. That is if they deliver 23 to 25,000 vehicles. So keep your eyes on NIO. I think if this neckline holds, even though they guided down for the next quarter, I think this could still be a short-term play. The next one here is Upstart, UPST. Let's pop it up. They also reported, and whoo, man, that is not looking good. They closed at 313. They went down 6% on the day, and now after hours, it's way worse. They're down another, oh my gosh, $70 per share in the aftermarket hours right now. And look, this is a pure definition of a falling knife. Let's see what they did, because they had to have reported horrible earnings for this to be falling like this. Wait a second. They double beat. What the heck? They did Q3 EPS of 60 cents versus 35 cents, which beat by a long shot. And sales came in at 228 million versus 214.9 million. So double beat on Upstart. And they see Q4 revenue of 255 to 265 million versus the 226 million estimated. Why the heck? Wait a second. Why is the stock going down so much? That's just the way it is. I mean, look, this is a good example of earnings and the overall stock market being irrational. So the stock is down, literally, guys, no exaggeration. The stock is down 20% after hours and 6% on top of that from the close. So it's down from today in general. It's down 26%. And they just reported good earnings in terms of EPS and revenue. Both of those beat. And we're seeing Q4 guidance up above the estimate. So I'm like, am I missing something here? I have no idea why. Maybe it was priced to perfection. The earnings weren't as great, even though they did do pretty well. Maybe they expected the earnings to be better. That's why the stock's falling. I have no idea. Let me know in the comments if you guys have any insight, but that's what I'm seeing there. I mean, that is just how the markets work sometimes, guys. So that is Upstart. Coinbase, which I did peek at this earlier, it's taking a hit right now. Coinbase is down $40 after hours. So let's see what they did, because we saw Robinhood. They didn't do well a couple weeks ago with their earnings. Their crypto revenue, from what I remember, wasn't that great. So let's see what Coinbase ended up doing. They did EPS of $1.62 versus $1.56 estimated. Net sales, whoa, look at that. Net sales missed by a long shot. $1.24 billion versus $1.57 billion. So they missed sales by about 0.3 billion, which is a pretty big miss. And Q3 trading volume, oh wow, look at that. The trading volume's down a lot. So we see here Q3 trading volume came in at 327 billion, which was down from the 462 billion in Q2. So do you guys remember the past couple of videos that I talked about Coinbase? I said I wanted it to come down. it looks like my wish might have been granted, but I'm not diving in quite yet. I'm going to wait and see if this sees another leg down towards 300, 290s. Then I'd be considering heavily, I probably will end up buying a little bit. So let's see here. The trading volume was not that good compared to the last quarter. Verified users came in at 73 million versus the 72.6 million consensus. Retail monthly transacting users at 7.4 million versus 7 million, so that's a bit higher than expected. Subscription and service revenue at 145 million versus 108 million, so they're doing decent, but the fact that they missed the revenue mark by such a long shot, that is not good. I'm not going to lie to you guys. That is not good, which again, that could cause the stock to come down to 280, 290, which is where I will let it fall right into my lap. So, yeah, it looks like people aren't really trading as much. That's what that data, that number's telling us from now, between now and Q2. It looks like a lot of people, less people are trading, which I guess that makes sense. Maybe people that are buying Coinbase, they're just, or Bitcoin rather, on Coinbase or Ethereum, they're just holding on to it. Maybe there's just less people that are actively trading. They're just buying and holding. Maybe that's kind of what we're seeing a little bit more of, or there's just less traders out there. I don't know. But hey, Coinbase, we're watching this dip. DoorDash, let's pop that up. I think they did well. I actually looked at this one as, yep, there it is. This closed at 190, and now it's up to 235. Holy crap. It's up $45 per share in the after hours. That is a big move. Jeez, guys. That is up 20%. So if you're a DoorDash shareholder, congratulations. Congratulations. Let me know in the comments if you do own this stock. I personally don't. I wish I did, but I don't own this stock. And now that we're seeing this huge breakout above the moving averages, above the wedge, this looks like, obviously, it's pushing to the next leg up, and this could start the next huge run in DoorDash. Hey, it very well could. So let's see what they did. They did EPS of 30 cents in the red. Seems like that was in line from what I'm seeing here with the estimate. And sales beat 1.27 billion versus 1.18 billion estimated. And they exited Q3 with 9 million Dash Pass members, which I'm not sure what that means. I never use DoorDash, guys. It's funny, I'd rather just go pick it up. I'm that kind of guy. I don't like getting like a hot dog down the street, paying $20 for it after DoorDash fees and all that stuff. So, I don't use DoorDash, but hey, apparently a lot of people are, and the stock is loving it. It's doing well. I want to see guidance. They announced an acquisition. Finland-based Wolt, W-O-L-T. What is that? A food delivery startup, which they value at $8 billion. Ooh, that's a lot, guys. What is that? An all-cash deal, stock deal, half-half? What is this? I'm not really seeing it, but it looks like they're just acquiring them. We'll get more. It says all-stock deal. Okay, I just read that now. All-stock deal is what they're doing that with that Finland-based company. So, hey, DoorDash is ripping. We're going to be watching this huge momentum play, and if we do end up getting a pullback, which I'm going to be waiting for, maybe we could end up trading it. So let's look at Wynn Resorts. This is one that ended up selling last week, I believe on Friday. I locked in about a 6-7% gain on this, and let's see what they did before we look at the chart, because quite honestly, the chart does not look much different from where I saw it last. So they did $1.24 in the red EPS versus $1.31 in the red, so that beat. Sales also seems like it beat by a little bit there, 994.6 million in sales versus the 942.64. Hold up, guys, my voice. So, oh, that's cold. So by the looks of it, they double beat. And I want to see here, Wynn Macau, 130.7 million, an increase of 79 million from last year. So Wynn Macau revenue, of course, as expected, it's up. Same with the Wynn Palace, same with Las Vegas operations, Boston. It seems like all of these are up from last year, which makes sense considering the world has been getting back to normal, or the new normal, whatever the heck you want to call it. It's been opening up. People are going out again. So the stock is not really moving much. I mean, it's up about $1 $1.50 in the after hours. It closed at 94. Now it's almost 96. So it's doing pretty decent. And as you all can see, we've been reversing. We're trading above the moving averages, all that good stuff. Now I just want to see if this starts gunning for the highs from, is that yesterday? Yeah, I guess yesterday they almost hit 99 bucks. So if we hit those highs, take the highs out, and I think my sweet spot number on this is 100 bucks, 105. If that breaks, and I've said this before, I'll say it again right now. If 105 breaks, this is a $120 stock. I bet my money on it, and I probably will bet my money on it when I do buy the shares at that point. 100, 105, I'm going to wait for it on a technical breakout. So let's look at Fubo. They just reported, and the stock is down. It's down about $3 per share, a little bit less than that in the after hours. So let's see what they ended up doing. Come on, Fubo. Where are you? There we are. 156.7 million revenue versus 143.55 million. So a nice beat on revenue. They're for sure losing money. Where is it? 74 cents in the red EPS. So they're losing money. And let's see their subscribers. Average revenue per user per month rose 10% year over year. I don't know if that's good, bad. I mean, I'm not too entrenched in the streaming businesses. I mean, I don't own Netflix. I don't own Fubo. I do own Amazon, which barely focuses on Amazon Prime streaming. Maybe they do a bit, but I'm not sure if 10% year over year average revenue per user per month is a good number. But hey, they're growing nonetheless, and it seems like they raised their full year 21 guidance, sales guidance from 560 to 570 million to 612 to 617 million, which is a nice pop there, nice raise versus the 577 million estimated. And where is it here? Oh, they also raised their full year 21 subscribers guidance from 910 and 920,000 to a little bit over 1 million, which makes sense considering they raised their sales guidance, which they make money from their subscribers, right? So I think this was a pretty good report from a brief glance. I like the numbers, and when it comes to growth companies, guys, I've said this before, I'll say it again, I've been saying that a lot lately. It matters more about their revenue. It doesn't matter too much. I mean, don't get me wrong. If they're losing money like crazy and there's no way they're going to make that money back, that's a problem. Don't get this wrong. But if they're growing a lot on the top line, growth companies, and their EPS, they're losing money, it's not that big of a deal if they're in the growth phase. So keep your eyes on Fubo, and yeah, I mean, I think this could be a nice dip buy. You're noticing we didn't break 35, which is a big sticking point. Now we're back to the low 30s. If we break back above 30, 31, or 31, 32 rather, this could start being a move to the upside. So keep your eyes on Fubo, guys, and let's quickly run over what we talked about today. We talked about NIO, Upstart, Tesla, Coinbase, DoorDash, Win, and Fubo. Write those down. Set your alerts. Those are the 7 stocks that I am keeping a very close tab on right now. So, yeah, let me know your thoughts in the comments. Make sure to hit the like button if you guys enjoyed this video. Let's try and get, I'll challenge you guys. Let's try and get at least 200 likes. Make sure to subscribe as well. And check out my Patreon. If you guys want my buys, sells, call outs, morning update videos, plus more, all of that's linked down below, or you can go to StockSurfFest.com/Patreon. Make sure to also get your $50 free from M1 Finance. That's limited time, and your 2 stocks from Webull up to $1,600, also limited time. Those are also linked down below. And with that being said, I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.